Hello, I'm Tom Selby, AJ Bell's Senior Analyst, and in this latest edition of our regular markets review, Breaking the Mould, I'm going to take a look at housing, rental kit and oil. All of these are capable of causing a fuss in the week ahead because coming up we have trading statements or full year results from three house builders, namely Berkeley, Barratt and Redrow, a first quarter statement from Ashtead, and we're going to see first half figures from oil equipment expert Hunting. So let's kick off with Hunting, a FTSE small cap stock, which is due to report interim results on Monday the 5th of September. As you can see from the chart here, its shares pay close attention to the oil price, which makes sense given who the company's customers are. Lower oil prices have meant less spending on research and exploration, and that has hurt Hunting, whose profits have well and truly gone south. Moreover, the consensus forecast is for a loss both this year and next. July's trading statement reaffirmed that trading has remained weak, adding that even the full year guidance of a 30% to 40% drop in full year sales depended upon improvement in the second half. However, the Baker Hughes rig count has begun to tick up in the USA, as shown here, so that could help things a little bit. Other figures to watch include net debt, which was just $90 million at the last count, and any updates on cost and headcount cuts. But in theory, it's higher oil prices and higher rig counts that will matter the most in the end. Another firm with an eye on the oil price is FTSE 100 constituent Ashtead. It's an equipment rental specialist with operations in the UK and the USA, with more than 3/4 of sales coming stateside. So weaknesses in the pound against the dollar is at least one thing currently running in the firm's favour. The shares have rallied strongly since spring, helped a bit perhaps by the rebound in oil from below $30 to near $50 as the US business Sunbelt had exposure to onshore oil and shale exploration in America. For the full year to June 2017, analysts are looking for 14% growth in sales, a 17% advance in pre-tax profit, and an 11% improvement in earnings per share. So they can be your benchmarks when it comes to analysing the first quarter figures, which we're going to see on Wednesday the 7th of September. Also watch out for an update on Ashtead's £200 million share buyback programme. Finally, let's turn to housing, as three builders are due to report in the coming week. We're going to see Berkeley have its annual general meeting on Tuesday the 6th. On the same day, Redrow will report full year results, and on the 7th, Barratt will publish its full year figures. In all three cases, the key metrics to watch out for will be first, volume completions and whether there's been any change in momentum following the EU referendum result on the 24th of June. This chart shows full year growth in volumes at all three builders. Second, pricing trends, and again, where there's been any post-Brexit vote loss of momentum. Again, the chart shows full year-on-year pricing trends for all three going back over a decade. Also watch out for comments on land bank acquisition as a sign of confidence or otherwise in the future, and trends in forward sales figure. Note that Barratt and Berkeley, based on consensus analyst forecasts, are offering yields of 7% or more for the coming year. Both have a very well defined special dividend programme, but the market seems to have its doubts as to whether analyst forecasts for the special payments or dividend growth can be maintained in the event of a housing downturn, as evidenced by the share prices, which you can see in turn here. So here we have Berkeley and then Barratt. However, the balance sheets are healthy, and if they stop buying land and run themselves for cash, the dividend should be well supported. However, the builders like to buy land in downturns as it helps future margins, so let's see if the companies give any indication of whether there is a slowdown coming or not. Both capital growth and income seekers will be paying close attention here. The question is, how accurate are the earnings and dividends forecasts going to be? For the record, Redrow is expected to offer a total dividend of 10p, up from 6p, enough for a yield of just under 3%. To finish, here is the share price over the past year. Thank you very much for watching, and I look forward to seeing you again next time.